Welcome to Tax Issues. I'm Gregory Papp.
And I'm Ellen Olds.
Ellen, what issue are we going to be debating today on Tax Issues?
I think internet taxation.
That sounds great. But one question. What is internet taxation?
In this debate regarding internet taxes, there are three main facts that should be emphasized. First of all, sales taxes are currently placed on mail order and internet purchases in the same manner they are placed on purchases in a store. Secondly, sales taxes currently represent 1/4 of all tax revenues raised both by states and localities to fund education, public safety, health, and other essential services. Lastly, according to an interview with Amazon founder Jeff Bezos in the magazine Fast Company, Amazon.com, the largest internet seller, and other corporations like it, are intentionally relocating from New York to Washington State in order to force fewer customers to have to pay tax on their purchases. So, the question is, should the federal government impose internet taxes or leave the purchase of internet goods and services the way it is now? Those that believe that no further taxes should be placed on internet purchases have the following reasons. They believe that the benefits of knowledge, trade, and communications that the internet is bringing to more people in more ways than ever before are worth the tax revenue losses, if any. Also, agreeing to tax all e-commerce would jeopardize any further growth of this new digital economy and impede upon the ability of entrepreneurs all across the country. Secondly, John Kasich, the House Budget Committee chairman, recently introduced legislation that would ban state and local sales taxes on goods and services that are sold over the internet. The Internet Tax Elimination Act, entitled H.R. 3252, would make permanent the current suspension regarding internet access taxes and taxes imposed on transactions because they are solely involved with e-commerce. Lastly, state and local governments as of now have no legal right to tax any commercial activity that occurs outside of their respected authority. The 1998 Internet Tax Freedom Act was authorized by Representative Chris Cox and Senator Ron Wyden and signed into law on October 21, 1998 by President Bill Clinton. This law bars federal, state, and local governments from taxing internet access and from imposing discriminatory internet-only taxes such as bit taxes, bandwidth taxes, and email taxes. It has been twice extended by Congress since its original enactment and is currently scheduled to expire in November 2007 unless further action is taken to maintain it in force.
Well, that sounds great, Ellen. But opponents of the tax have argued that the internet would still generate revenue even if it was taxed, and that the current federal ban on internet taxes denies all governments a much-needed source of revenue. The internet is no different than other businesses, except its transactions are done in person instead of over a long distance, and like all businesses, it should pay taxes to the government on each item sold. Many state and local governments of both political parties fear future loss of revenue for services such as schools, roads, and public safety. Another reason is that low-income consumers will pay a disproportionate share of state and local sales taxes. In order to purchase over the internet, a person needs a computer, internet account, and a credit card. Households with incomes of over $75,000 are more than 8 times as likely to have home internet access as households with incomes between $10,000 and $15,000, according to the latest Commerce Department study. But by not taxing these purchases, higher income producers are able to buy more and still pay the same taxes they would before the purchase. An additional reason applies directly to the sellers of merchandise. Retailers will be at a risk of losing much of their business to internet sellers as long as they have to add 6 to 8% of sales tax to their prices at the cash register, while internet and mail order merchants can sell tax-free. One study suggests that internet vendors owe as much as 30% of sales to this unfair tax advantage. The last, and maybe smartest reason, is to have the same computers that make it possible to bill credit card customers just collect sales taxes as well. The National Governors Association will compute the tax and send one combined check for all the taxes owed for each of the 45 states with sales taxes. The customer would just have to pay whatever sales tax is applied in the state of their residence. But really, as we think about it, the issue of internet taxes will not be changed anytime soon. Even though there are some great changes for the system, the government needs to be sticking with its policy of not taxing all internet purchases. Not until the end of 2007 will people see if the law will once again be renewed or finally will be changed. I'm Gregory Papp.
And I'm Ellen Olds.
And we're signing off.